Let's get across more of this with Tim Evans from Longleaf Trading Group, who joins us live from the CME in Chicago. Tim, great to have you on board today. Thanks very much for joining us. Now, note that those oil prices are hovering around the $52 mark. Let's just start with OPEC. They've achieved a record high level of compliance, I note, to those production cuts for September. So there does seem to be a lot of optimism perhaps being built into the price here that OPEC members are actually keeping their word.
Hi, yeah, nice to be with you today, Leanne. Yeah, I mean, no doubt about it. I mean, the optimism that has definitely built in the market. You know, the Saudi oil minister stated some time ago that he'd effectively do anything necessary to bring the global's crude oil market to balance. And so far, he's followed through on, on those promises. And, he's continued to indicate that if it's needed past March, that they'll be looking to extend that deal another 9 months. So, clearly the market's receiving that very well. And I really think that's ultimately what's providing a floor in the market when we do get bearish short-term forces that bring down price action. We see some pretty solid buying activity around that $50 level, I think, based on the expectation that indeed they will extend that production cut if they have to.
Is that what we need to see, do you think, in order to see those oil prices pushing through that sort of well-defined resistance level of about $53?
Man, I really think right now, Leanne, with crude oil, everything's a matter of time frame. What time frame are you looking at the market in? I mean, if we're looking at it in a short-term time frame, and I would define that by, say, a week or two, I think it's going to take an external geopolitical force. Maybe a breakdown in the Iraqi situation that's currently going on, or maybe another flare-up with North Korea, or some other regional issue in the Middle East that would have the market concerned. I don't think the supply and demand fundamentals here in the short term will allow the market to get through that $53, $54 level and hold it, without that force. But if we look at the market on a more intermediate, longer term force, indeed, yeah. I mean, I think they're going to need to extend that production cut if we don't see evidence that the market has continued to come closer to balance as we turn the corner into 2018, and and that sets a very different tone for next year than what we're dealing with right now.
Tim, as you say, investors are waiting to see the effects of those production cuts and increased demand as to whether that tightens that supply-demand balance in the market. You also, of course, have the US shale story, and we actually saw those US shale exporters reducing the rig count on Friday. I think it was a reduction for the third straight week. This was according to some data from Baker Hughes there on Friday, and again, that was actually really supportive of the market.
Yeah, and it is, and I think, again, I mean, I think week over week over week, I mean, we were always trying to figure out, at what price point would, U.S. producers, begin to not be as active from an investment standpoint. And, I think that $50 level or sub 50 obviously is the point at which, that begins to have effect on the bottom line or expectations of the bottom line of a lot of these major U.S. shale companies. Yeah, I mean, 7 out of the last 10 weeks, we've seen declines in the rig count. It dropped by 7 last week to 736. I mean, that's the lowest number we've had since June. So it's definitely having a impact on at least the perception so far. I mean, I know over the weekend, CEO of Schlumberger, stated that he thought investment demand would drop over the next 2 quarters. And he thought that would ultimately provide a cap in terms of U.S. production ability or levels, and I happen to agree with his assessment.
Let's talk about the other ongoing situation, and you mentioned it in your earlier commentary, and that is around the political situation in Iraq, because there are continued supply disruptions in Iraq that again seem to be supportive of the price right now. But Tim, there does seem to be some debate as to what the actual disruption is.
Yeah, I mean, it's a fluid situation. I mean, as we kind of enter into the weekend, I mean, most reports were showing that the production levels dropped between 200 to 250,000 barrels a day. As we approached Monday morning, private sources that we discussed with, indicated that that number had improved a little bit, where the disruption wasn't as great. And also over the weekend, the Iraqi oil minister, talked about the fact that they increased production from the southern region of Basra upward to 200,000 barrels a day to help replace what was being lost in the Kurdish territories. So, I think there's going to need to be a development in this geopolitical situation, for the market to, continue to see higher prices based on it.
Let's talk about China. We've been seeing a lot of optimism out of China recently. Of course, the 19th National Congress still ongoing there, and we're hoping that's going to remain supportive of those commodities. The market's still seeing those tailwinds of that jump in Chinese imports. There is a large expectation that growth in demand will continue.
Yeah, I mean, the numbers have continued. I mean, obviously, China and South Korea, and a variety of other Asian nations. I mean, they demand crude oil, and they're demanding it at a record clip. I know that the Chinese government was active in kind of restoring their reserves, which obviously helped demand. A lot of the market was concerned that once that activity slowed down, that we would see a drop-off in demand, but we've actually seen a pickup in demand. And that on top of the expectation of tax reform in the United States, that leaves the market kind of looking like we possibly could be dealing with a scenario where we're not just seeing demand growth out of Asia, but we're also seeing domestic demand growth. I'm not going to make an argument for what the Trump administration is trying to sell to the public, but they're communicating that American household incomes could increase by $4,000 a year if their version of this tax reform package passes. Obviously, $4,000 a year in each family's pocket will surely add to the demand for energy consumption. So, I think on balance, from what we've consistently been seeing out of Asia and what the market's hoping that we see out of the United States, that global demand altogether will definitely increase.
All right, fantastic. Look, Tim Evans, we're going to leave it there. It's been great having you on, as always. Thanks very much for your time today.
Have a great day, Leanne. Thanks.